Good morning. Thanks for tuning in. You're watching the F&O Show on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam. Let's take a look at the headlines. Markets open lower on the February series expiry day. The Nifty is now down for the fifth day and trades around the 11,600 mark. All sectoral indices trade with losses. Open interest is rising in Bajaj Auto and Amara batteries towards fresh shorts. Vodafone Idea seeks urgent state intervention over pending AGR dues. It has expressed its inability to shell out the entire sum. That's a Bloomberg exclusive. And India Cement continues to gain after the Damani family further increased stake in the company on Wednesday.
All right, those are your top headlines at this hour. And looking at the markets, clearly it's not a great sight, as Agam highlighted in the headlines. This is the fifth straight day of fall coming in. And today is also the day when your monthly contracts expire. The only hope is, let's see if there is any sort of short covering bounce which comes in the second half. And not remember, there are a lot of shorts sitting in the system. But as we speak, Nifty is down about 100 points. Another key level, by the way, which got breached today. We breached the budget day low of 11,633. We breached this month's low of about 11,614. So I think essentially 11,579 should be your 2020 low for Nifty as well. And Sensex down about that psychological mark of 40,000 was breached yesterday itself. And Nifty Bank is at a very crucial level of about 30,000. By the way, both Nifty breached and closed below 200-day moving average yesterday itself. It continues to trade below that mark. And today you got the Nifty Banking Index now, which is trading below the 200-day moving average. Let me just do a recap of the series. So far, we are, by the way, headed for third straight series of losses in terms of, F&O series. So Nifty is so far down about 3.5%. Nifty Bank is down about closer to 2% for the series. And mid-cap has finally underperformed, which is down about 4%. But so far for this calendar year, Nifty mid-cap index is still up about 2%. All your sectoral indices also in red. So the losses today are led by realty, metal. And the surprising element today is the IT index. Remember, you got heavyweights like TCS and Infosys there, which are dragging the markets lower. So Nifty IT is down about 1.5%. Very quickly, then, what levels to watch out then for today's expiry? After breaching that mark of 11,600 call has seen writing coming in the morning session itself. Close to 23 lakh shares, by the way, have been traded or added there. And on the put side, let's see if this mark gets defended or not. 11,500 put has seen addition of about closer to 28 lakh shares. Just looking at the data closely, if somebody wants to play that short straddle of 11,600, combined premium will be somewhere about 45 to 50 agam. So the range, I think, for expiry somebody can expect should be about 11,550 on the downside to 11,650 now on the upside.
Yeah, Thomas, things have certainly changed quite drastically over the past 3 to 4 sessions. And of course, levels have, as a matter of fact, moved even lower. But let's talk about a handful of stocks which are also in focus on this expiry day on the back of change in open interest. And there is PFC along with Bajaj Finserv and Amara batteries. All of them looking at some amount of weakness. In fact, that is the case for Bajaj Auto and SBI as well. And these shorts we're not looking at a tremendous move in the spot price, but there's been an increase in open interest. And this is the February future, so a lot of these positions are most likely could be one, either that, for the rollovers, or the second, of course, could be the fact that these are intraday positions being taken. Let's move on and talk about those stocks which are seeing unwinding, and I'm sure there will be quite a few. We have IDFC Bank, Bosch, and Exide Industries, along with Just Dial, which is also in focus. Just Dial moving just further down now at around 472. Watch out for that one. A lot of weakness seen there as well. Well, Navneet, overall, it's not turning out to be the best of trading days. And again, an eye on volatility is what we're going to be watching.
I was coming to that point of India VIX. It was up about 8% just one day before the expiry. Today as well, of course, VIX is on the higher side. And this is not owing to any domestic cues. Remember, this is solely due to coronavirus fears which has spooked world equities now. And these are just not good levels for the bulls or any sort of recovery that you want to see in the markets. We've seen every pullback is getting sold into because of higher volatility in the market. We're nearing the mark of 19. And also remember, we could be in an oversold territory. Reason being, PCR now is around the level of 1 or maybe below that now, just in the first 40 to 45 minutes of trade. That's about the markets. We're at the lowest point of the day. But in terms of individual stocks on the show, we will be discussing stocks like Motherson Sumi, which is down about 12% so far this week. And this one continues to witness fresh short positions today as well. Amara Raja is the other one, which is down for the 5th straight session. In fact, it's also slipped below the 200-day DMA this week. And bucking the trend is Max Financial, owing to the agreement maybe with Axis Bank. The stock's up about 23% in the last 8 sessions. It's also one of the top F&O gainers so far, Gum.
Okay, there you have it, guys. That's the view on the markets. But it's time to get in on our experts. But before that, here's a reminder. If you have any queries regarding futures and options markets, you can call us on 022454044141, or of course write to us on Twitter, Facebook and YouTube with the AskPQ hashtag. Today we have with us Gaurav Bissa of LKP Securities, and just in some time we will also be in conversation with Ashish Chaturmohta of Sanctum Wealth. Well, for now, Gaurav, good morning. Let's start with you. Where do we go from here? Things are certainly looking quite serious, but some may also suggest that the markets are extremely oversold. Where do you stand in this debate?
Good morning. Yes, the markets might seem oversold, but the underlying whether stock or indices, they can remain overbought or oversold for a long period of time, and the trend may not halt or it may not reverse. I was quite upbeat yesterday. We had a bullish harmonic pattern being formed around 11,680, which was also a 200 DMA, and we did see a bounce of 100 odd points, but then again it was again sold into, and now it's comfortably broken those levels. So I would be not be too bullish at this level. It's a sell on rise for time being, as long as we are not trading above the 200 DMA again. The only positive thing that I can see here, but I would not be too aggressively bullish on that front, is the fact that on weekly charts, the Ichimoku supports come around levels of 11,550 spot side. That does not mean that we will see a reversal from this area, but yes, if these levels are sustained, we may see a bounce back. But that bounce back is likely to be sold into, because we have seen multiple breakdowns happening. And with the advent of move below 11,680, I think if we give a close below 11,680, like in 11,700 or so, 11,600 or so, then we may head towards the level of 11,400. So in my opinion, there can be a bounce, but either use that bounce to create fresh shorts, or if you have taken any long positions, you can exit there. But at the current juncture, I would not be bullish on the market.
Okay, at current juncture, not bullish in the markets, and as we speak, we're only grinding lower. Nifty Bank has also breached that psychological mark of 30,000 now in trade. Let's just pull up Nifty Bank. Remember, this one was slightly outperforming, but this has also come under pressure, down about 1.1% so far in trade. Let's also bring in Ashish Chaturmohta, Head Technicals and Derivatives at Sanctum Wealth, who joins us right here in the studios. Hi, Ashish. Good morning. Relentless selling pressure, volatility is high. What would you recommend doing now? Any trends that you're spotting in terms of rollovers, any position that one can take?
Good morning. So I think we are in a weak trend, and we have broken today the budget lows, which is also not a very healthy sign. We have broken continuously the important put writing points. So first one was at 11,800. Now 11,600 was where we were seeing a lot of put writing happening. So I think both these levels are broken. So that can lead to some significant selling pressure which might emerge into the market. And today being expiry day, a lot of these positions might start unwinding. So people were expecting some kind of pullback on the rollovers day, and I think if that doesn't happen, then that can lead to equal amount of unwinding positions. So that can have a negative impact. I think Nifty is poised for a move below 11,500 to somewhere close to 11,450 kind of zone. One need to be a little cautious in the market, and I think till I don't see a clear reversal, I'm okay if I miss the initial 150-200 points, but we need a lot of stability before getting into any kind of long positions at an index level.
Fair enough. And these are markets where it will be tough to call out stocks, but I'm still going to urge our experts to talk about some of them, even if they are towards the short side. So Gaurav, I'll take this one up with you. Anything that speaks to your interest in terms of stocks?
For the short side, there are a couple of them. One would be Glenmark, a continuation call. It did see a decent dip yesterday. We saw a bounce again coming. It has again retested the breakdown levels and again fallen back. It's again corrected in last 20 minutes, but any jump towards 297, 298 can be utilized to create fresh shorts. It can slip towards 285. That is taken out even 275, 274 is also possible. Another short would be SBI. We have seen that one it is trading and rising in a falling channel. The breakouts were around levels of 330. There's a good writing happening in 330 call option as well, and it has given multiple occasions. It has seen a reversal exactly from levels of 330, 331. So any jump towards 328 can be utilized to create fresh shorts. Stop loss of 332 on a downside. 315, 312 is what I would be looking in that. Amara batteries, you spoke about shorts being created, but the only positive aspect, there are two bullish harmonic patterns, a butterfly as well as a bullish cipher pattern that is being found in the name at levels of 670. So keep a 10-point stop loss on the upside. 700, 710 is what I would be expecting in Amara batteries.
Okay, so that could be a contra bet on Amara Raja, which is down for the fifth straight session. Let's see if it bounces back from these lows or not. This was one of the stock which we also wanted to discuss with our experts. But Ashish, in terms of individual stock futures, is there any trade that you're recommending?
So I think IndusInd Bank is one stock which is looking very weak. It has broken multi-month lows, and I think the way the structure is panning out, any recovery is going to be short-lived. So I think this is a short candidate, maybe at current levels, and on any recovery towards 1125, a good candidate to average the short position. 1135 would be my trading stop loss. On downside, 1050 is what I'm expecting in IndusInd Bank on downside. CESC is one stock which is also looking very weak, broken strong monthly supports below 735 kind of zone, and since then it has been continuously correcting. If you look at today's data, almost 8% OI addition has been witnessed. So I think this is one stock which is headed for much lower downside. 668 would be my trading stop loss. 620 is an immediate downside target one can expect in CSC. Only long call which I think can be initiated even at current levels would be Dabur, which is continuously holding on to the weekly support, and despite the kind of carnage we are witnessing at an index level, at a broad market level, Dabur on the weekly charts is continuously making a higher top, higher bottom formation. So here one can initiate a long. 496 would be my trading stop loss. 525 is a short-term upside target one can expect in Dabur.
Okay, from there on, let's talk about, Motherson Sumi, because that's something which has also been gradually grinding downwards. Let's pull that up and see how things are panning out. So it's down 12% this week, down 26% through the course of the year. And it is, of course, one of those companies which does have a significant exposure to the global economy, which is why it is grinding lower. It's down 3.5%. And we're not looking at too much in terms of, of course, rollovers are at around 71%. But Ashish, can I come to you on Motherson Sumi? Where do we go from here on this one?
So looks weak. In fact, I think we have been recommending this stock as a short candidate. I think this even at current levels, stock looks weak for 198 kind of zone on downside. So even if you are short, just keep 110 as in trading stop loss. Even if you want to go fresh short, I think 110 should be the trading stop loss. On downside, 100 would be my immediate downside target in Motherson Sumi.
Okay, that's Motherson Sumi. Selling pressure continues there as well. And just, I think, handful of stocks, 6 to 7 F&O securities are just about trading in the positive territory, and the gains are only about between half to 1%. So Pidilite right now is your top F&O gainer with gains of 1%. Max Financial had opened with gains of about closer to 2%. I think that too has given up majority of the gains, but this has been an outperformer. Yes, it's just up about just 0.25% higher now. It's up about 23% in the last 8 trading sessions. Rollover is at about 42%. Of course, last 1 year, this one's given you returns, and that's only owing to the deal, which the street's been waiting for. An agreement has been signed with Axis Bank, but let's see what that entails going ahead for Max Financial. Gaurav, Bissa, do you take a bet on Max Financial, which has been bucking the trend?
It had seen a consolidation breakout. It retested the breakout levels, and now it's trading higher, the higher zone. But having said, it's already seen a very strong move, and the problem with these names is that if you don't see continuous buying emerging in these names, then you can again see some profit booking, so to speak of. So there are two instances where you've seen strong profit booking on weekly charts at around levels of 605, 608. In my opinion, you buy either on any dips towards level of 565, 570, keep a 10-point stop loss and play for again 610 targets, or you buy about the breakout area of 610 to be safer side, and then you play for 640 levels, keep a stop loss of 595. At the current juncture, it's going to be volatile, and it's better to play either with the support area or on the above the breakout area.
Let's talk about a stock which has been considered one of the steadiest in Indian equity markets, and that's Bajaj Finance. It's, well, been holding on to levels, of course, on a relative term, but currently at around 4,700. We're starting to see just some amount of pressure building onto this one as well. Ashish, your view on this one, how would you trade this?
So I think if you look at the stock, although yes, it's still in a strong uptrend, but in the immediate short term, I think the stock is about to break last week's low, which is around 47.12. So my call is if it breaks 47.12, then I think at least a downside towards 4,500 could not be ruled out. That indicates almost 200 rupee kind of downside. So I think one need to be a little cautious on creating a long position on dips in the stock. In fact, if it breaks 4,700, if you are on the long side of the trade, keep stop loss. If you want to be a little aggressive, keep 47.50 as your stop loss. Once it breaks at 47.10, I think downside towards 4,500 is on cards.
Okay, and when these biggies also start to fall, that will further spook the sentiment in the markets. Let's see. Reliance has already started dragging Nifty lower in the last 3 or 4 trading sessions. Let's start addressing some viewer queries as well. Arpit Maheshwari writes to us, and he's holding 2 lots of ICICI Bank 500 put strike, which he purchased at a premium of about 6 rupees. Currently, the stock's underlying is trading above that mark, 516. That's the 500 put trading at, no, this is for the March series. I think he's taken for the February series, if I'm not mistaken. He's not mentioned the series. So, Ashish, I'll come back to you. I think he's making, I'm presuming it's February series. So, 500 put option, two lots he's taken, 6 rupees, and currently premium is just about zilch. It's 0.3 paisa. What do you do?
So the challenge is that the stock looks weak, but because it's a February expiry and today being the expiry, it needs a substantial amount of correction to recover some kind of money. Yeah, so I think yes, this ICICI Bank is weak. Maybe a level towards 500 is on cards, but that might happen in next 2-3 trading sessions. And if that happens, I don't think this put is going to make any money out of it. But since there is no premium left, it's just 0.30. He should continue holding on to the put.
It's not in the money, so no harm, considering there is physical settlement, so there's no harm, right, if he continues?
Yeah, so he can definitely continue holding on to the position.
Okay, and another interesting query coming in, and this is from Vivek Joshi. Now, Vivek holds the 11,500 put, but this is for the April strike. And of course, he's bought that put at around 69. It's currently at 258, so he's clearly making a lot of profit right now. His question is, should he hold till April expiry or book full profits right now?
I think you need to congratulate him first.
Well, of course, it's a great a position to take for now. It's turned out to be a good one too. Gaurav, what's your view here when it comes to this specific 11,500 April put that the viewer has bought at 69, currently at 258? Would you advise them to book or hold on for now?
See, if there are more than one lot that has been traded, then making a partial profit would make sense. As I said, there's a weekly Kijun supported area of 11,550 spots, so there can be a bounce back. The trend still remains negative. So either one can keep a trailing stop loss, because if once 11,550 is broken out, then we are looking for levels of 11,450, 11,400 as what Ashish also mentioned. So in my opinion, if there are multiple lots, book a partial profit. If not, there's a chance that we may see a small bounce back, which can again be sold into. So one will have to play with a trailing stop loss and ride the trend. There is a chance that we may slip below levels of 11,500.
Yep, I would go with Gaurav. At least book partial profits if you're making money in these uncertain times. You never know what happens going ahead, considering the only trigger for the downfall globally for world equities has been coronavirus. Okay, let me take a query on Colgate Palmolive. Ashish, I think this one too has slipped below its simple 200-day moving average. Would you advise someone to buy at these lower levels, or they should wait it out? Sai Krishna wants to know.
So Colgate is in a range. I don't think it's weak also, but I think if he wants to really buy in the futures and options segment, he needs some momentum to catch in, and that momentum will start happening once the stock crosses 1355. So wait for either a breakout above 1355 or buy on dip somewhere close to around 1290. So that's a range which we expect to pan out. Either buy on dips which is closer to 1290 area, or if you want to buy clearly on momentum, then 1352 is that area where one can initiate a long position.
All right, that's Colgate Palmolive for you. And we've started getting a lot of queries from Colgate Palmolive too off late. But yeah, there you have it. That's Ashish's view on that one. And from there on, we move on to another query, which is on, all right, we have State Bank of India, which is in focus. We have Alan Divahar, who wants to know what can be done. Wants a 2-week view actually here. He's holding it around 328. It's currently around 324. There is a possibility that they could head downwards further. Gaurav, your view, take that small loss and move out or hold on to the longs here?
You're talking about SBA, right?
Yeah, that's correct. State Bank of India, yes.
So as we discussed earlier, that 331 is the crucial juncture. We have seen reversals coming from this particular area. In my opinion, one should exit the current point. There might be a bounce. You may say that it moved from 322, 23 to 327. But the point is, as long as it's trading below 331, the trend is going to be weak, and it can again slip towards the level of 315, 312. In my opinion, the current strategy would be to exit at these levels, buy only above levels of 331. On the safer side, if one can hold a little bit more, let it give a hourly close above 331, in which case you can play for 350 kind of levels. But as long as it's trading below 331, expect some amount of pressure coming in the name.
Okay, that's SBI for you. The rollovers are at 75 to 76%. Ravi is saying he's expecting corona impact to cool off by the end of March. I think people are betting on rising temperatures, which will help in virus subsiding, but that remains to be seen what happens. So in light of that, Ashish, he's asking, is it too late to take a calendar call at 11,600 and 11,800 levels for the March series, of course?
So I think see, our view is that markets are entering into a weak territory, and ideally any kind of short positions of or bear put spread strategies will work in this market. So I think if one wants to really initiate any position, my idea would be to buy 11,500 put and to write 11,300 put. That's creating a bear put spread in the market that will, I think, make better money in this kind of environment.
So it's risky to take a long call right now, but would you advise to take a short call at current levels?
So I would go with option strategies, because see what happens is
you hedge your position if you're taking a call on the index.
Correct.
Okay.
Okay, we have a question from Harshvardhan. He wants to know if there is any short trading opportunity in Bharti Airtel for the next month expiry. Gaurav, would you sell Bharti Airtel at these levels? How does this one look to you?
See, the whole idea behind shorting is you sell names that are looking vulnerable, which have been underperforming, or where you see a reversal pattern being formed. I don't see a reversal pattern in Bharti Airtel as such. It has given a good breakout above 490, 500 levels, and this has still been holding on. One can argue that it has slipped from 560, 570 to the levels of 530. But looking at the carnage that we have seen in Nifty, this being a Nifty stock, it is still holding above the breakout area. So this is more of a stable name. Rather, one should look in this way that if market stabilizes and if we see some sort of buying emerging at whatever level I'm talking about in Nifty, then this is one that can see the momentum being intact. So names like Bharti Airtel, ICICI Bank, one needs to be a little bit cautious. There can be some dips, but they are not very aggressively shorting candidates. So in my opinion, I would not be recommending a short in Bharti Airtel.
Not recommending a short, and the stock's actually not corrected with the magnitude of fall you're seeing for markets. Bharti is just down about, by the way, 1%, and it's been an outperformer at least in the last 4 or 5 months. I'm going to take a query on Reliance futures. Lalit Akhare writes to us, and he wants to know, can he look to buy the March futures at current price? Remember, we were highlighting how Reliance has been dragging Nifty lower in the last 4 or 5 sessions since the time this correction has started from last Friday itself. Technically, if you look at it, I think it's just heading towards its 200-day moving average. May not have breached, but it's just about at its simple 200-day moving average. Ashish, it's come off from those levels of 1500 to now 1380. Is it the right time to enter, to take a call on the upside?
So I think again here, it's hovering around the previous lows of budget lows, which is close to around 1360. I think there is a possibility we might break that 1360 area and we might touch somewhere close to 1340, 1335 zone. Around those levels, one can look for some kind of entry point, but at this juncture, I would avoid any bet in Reliance, even at Reliance.
Okay, guys. On that note, we have reached the end of at least the futures and options segment. So I'm going to take a very quick moment to thank both our experts, Ashish and Gaurav, for joining us and taking us through their views and, of course, solving a whole host of your queries. However, let's address the news at hand. Vodafone Idea has made it clear that it's not going to be able to shell out the entire adjusted gross revenue dues owed to the government. The beleaguered telecom operator has written a letter to the government. PR Sanjay of Bloomberg News now joins us for more updates. Sanjay, good morning. What do you have for us?
Hi, Vodafone Idea has written a letter to government seeking some kind of relief, and you should also recollect that they had the boss, the non-executive chairman Kumar Mangalam Birla, had clearly said that they will have to shut operations of Vodafone Idea in case if they are not getting any kind of incentive from the government. So they have written a clear-cut letter suggesting what are the pain points for the telecom industry and as well as for Vodafone, and they've asked for soft loan of 6% interest rate, and they've also asked for there shouldn't be any GST for spectrum payment, payment, because for all such sovereign payments, including spectrum or AGR, because it is a sovereign fund and it is an internationally followed practice that there is no GST for any sovereign fund payment. They also mentioned another point where there should be a minimum 50 rupees plan for monthly plan for all calls, and there should be at least that 6 paise per outgoing plan and 30 rupees for a data plan. So which is like they are suggesting a minimum basic floor price for calls to ensure profitability for any telco. They clearly mentioned that it's not just for Vodafone, that is for the basic hygiene and health for the telecom industry, and they still claim that they would be India would be the lowest market in terms of tariff for any telecom players. So without that, they clearly said that it will not be difficult. It would be very, very difficult to sustain in this market, and that they've already paid 35 billion rupees towards dues, and they clearly said that they'll not be in position to pay any more funds to government in terms of AGR.
All right, Sanjay, thank you so much for joining us and getting us that update, a very crucial one, an important one as far as Vodafone Idea is concerned. And we'll continue to follow up on the story and keep giving you a lot more on that. But on that note, it's a wrap on this edition of the F&O Show. But for more news and updates, stay tuned to BloombergQuint Live.